you go from Bitcoin skeptic to Bitcoin believer, and then there's this seismic eureka moment where all of a sudden you say to yourself, wait a minute, I understand what this is now. I understand why I need to be invested and why I'm at the front of a early stage project. I'm at the frontier of something. Can you take us through that odyssey that you went through from Bitcoin skeptic to Bitcoin believer, but then also putting your money where your mouth is?
Well, I think over the last decade, we had progressive monetary expansion in the level of 5% a year, but which was significant to people that were sensitive to it. But for people in the tech industry or people that were busy with some other part of their life, we could live with 5% monetary expansion and still go about our jobs. And so I was a big tech enthusiast, and I was really occupied by my business until we got to 2020. And in that context, everything I knew about Bitcoin for the first decade was like noise. Like, I know it's something interesting and there's some people that care a lot about it, but it's noise. And I'm really more concerned about what the next iPhone is going to be or what Facebook is going to do or the implications of Amazon rolling over 15,000 retail companies. And those were all very exciting stories for a decade. And then I think we got to 2020, we got the K-shaped recovery. Main Street locked down, Wall Street had a V-shaped recovery. The monetary expansion jumped from 5% to 20 or 25%. Now you couldn't ignore the fact that the money supply was expanding. Now all of the interesting stories of the last decade, the Amazon story is over. We know how that ends, right? They win. The Google story, the Apple story, the Facebook story, they're all over. We know how they end, right? It's pretty clear. They're going to go on to another stage, but it's not a technology play. Now it becomes about politics and society. And so now we all have a problem in 2020. The problem is the money supply is expanding. And then you realize if you're trying to make money doing it the 20th century way, it's just really hard. And if you're trying to make money the 21st century way, you got to do it virtually. The virtual wave hit us. And so I would say I became really interested in Bitcoin the second quarter of this year. And I realized that this had the potential to be digital gold. It felt like digital gold that no institutions had quite embraced, but a lot of early adopters had embraced. And everybody wants, in an expansionary economy where the money supply is expanding, you all want sound money. And the previous sound money for 5,000 years was gold, mostly sound, expanding 2-3% a year. Bitcoin is digital gold, thermodynamically perfectly sound money. In theory, on a sheet of paper, if God designed gold with no imperfections, he would have designed Bitcoin. So it's like, well, this is too good to be true. You just got to figure out, is it going to be hacked? Is it going to be banned? Is anybody else going to buy into it? What's the problem? Because it looks perfect. And, we got involved not because it was elective. If I had a 5% problem each year, I could have ignored it. But when it became a 20% problem, I couldn't ignore it. We were forced, after March of 2020 to embrace the issue. So we got into it and we embraced it, not because we thought Bitcoin was risk-free. Bitcoin was $9,000, $10,000 a coin. There's a lot of controversy in April, May, June, even July, August. But we figured the certainty of losing half your purchasing power over 4 years was enough enough compensation to justify taking the risk of doing something new, right? A guarantee. And that's why we got into it. The next 6 months, you're going to see the story, which is maybe it's digital gold. Maybe the institutions need this thing I guess some need it, to more of them need it. And then it goes to 20,000, 30,000 and 40,000. And I think as we enter 2021, people's perception is rotated to, I guess it is digital gold and it's the newest institutional safe haven asset. And by the way, it looks to me like monetary expansion is continuing. Everybody's got an asset inflation problem. It's top of mind for every investor. What are we going to do about it? And so that's how we kick off the year as I speak to you.
So I was with a group of people. We've obviously launched our fund in good part thanks to your help and your intellectual gravitas and helping us get around to this. My eureka moment alongside of yours was understanding something you said last time we were together about it being a digital network, a digital platform for money, similar to an Amazon for retail, or say a Google for search and advertising, or Facebook for social networking. But I was with what I would call the rat poison crew. It was a group of men and women, but mostly men in their 70s and 80s that were buying into the Warren Buffett idea that Bitcoin is rat poison. Now, Bill Miller said, well, it may be rat poison, but the rat might be fiat currency. So Bill is a believer like you and I. But one thing that keeps coming up repetitively, Michael, I have my take, but I really want to hear yours, is, well, what the hell is it? It's just a encrypted code. There's 21 million of them. Okay, so I get the scarcity, but why would that be worth anything if all it is a code in the ether? And this is from the rat poison crew. And so your response to that would be, how did you get over that hurdle?
It's digital gold. Anybody could design code for digital gold, but it's digital gold on the dominant monetary network in the world. So if I had an idea for Twitter and I thought I was going to launch a speech network, anybody could copy it. But at the point that everybody on earth joined Twitter and they all looked at Twitter for half an hour a day, you got 400 million people pouring 400 million hours of bandwidth per day into Twitter. Then it's not the software anymore. Then it's a digital speech network. It's the dominant digital speech network for public speech. I think in the last decade, you saw dominant networks form for speech on Twitter. You saw a dominant video network in YouTube. You saw a dominant mobile network for Apple. You saw a dominant social network. You saw a dominant retail network in Amazon. Each of these things gathered the commitment of 1 billion people. And Warren Buffett talks about brand. Warren Buffett would understand Coke. The power of the brand of Coca-Cola is, if I obliterated every Coca-Cola plant and every bottle of Coke everywhere on earth, I couldn't get it out of the minds of 7 billion people. 7 billion people know what a Coca-Cola is. And so the brand of having that idea stuck in the minds of billions of people is very powerful. So Bitcoin is the brand of digital gold stuck in the minds of 1 billion people. But more importantly, it's gathered hundreds of billions and now getting close to, $700 billion worth of monetary energy. As that energy flows on that network, that's an incredible dominant network effect. And on the other side of the network, with the miners, you have billions and billions of dollars invested in special purpose hardware mining rigs, decentralized everywhere in the world, that has no purpose other than to run the digital gold network that is Bitcoin. And so you have massive hundreds of billions of dollars of monetary energy sunk onto a monetary network that is the brand. And so in that regard, it has the same dominant inertial effect that Twitter or Facebook or YouTube or Google have. In order to replace it with a copy of the code, you have to displace the $700 billion of monetary energy. But then again, what would be the motive for the $700 billion to move to Bitcoin version 2? I mean, there really isn't one. So it takes on a life of its own. And as the price goes up, there's this is not just driven by Metcalfe's laws. Metcalfe's law says that the power of the network is the square of the number of people or number of nodes on the network. That would be true if everybody on Earth had the same amount of money. If everybody had $10, then Metcalfe's law would be the rule. But this is driven by Newtonian laws of physics. That is, some people have $1 billion. Some people have $10 billion. So if people weighed 10 billion pounds or 1 trillion pounds, they'd have a gravitational pull that is more than the person that weighs 100 pounds. And so the laws of gravity are flowing on this network. And as the price goes up, it's kind of like all the mass is collapsing into a planetary body. The gravitational attraction is increasing. Therefore, everything that comes in the orbit of the planetary body is being sucked into the planet. And it's getting stronger and stronger. As that price goes up, Bitcoin is the one asset that as its price goes up, it is more attractive to investors, which is the opposite of a stock price, whereas the price goes up, it looks more risky and less attractive to an investor. And it's a very subtle impact of a monetary network that's worth understanding and dwelling on, I think.
But you said something that has never left me. I'm going to repeat or hopefully paraphrase what you've said. You said the first Bitcoin is the hardest one to buy. Once you own it, you realize that you don't own enough. Do you remember saying that? I want you to take us through that thought pattern there.
Well, I mean, first you have to have a problem. If you embrace the idea you have a store of value problem because of a macroeconomic sensitivity, that leads you on a quest for what's your store of value. Then you realize that the theoretical best answer is a crypto asset network that's decentralized, that duplicates gold, that is deflationary, and that is Bitcoin. Then you have to get over all of your concerns about forking and hacking and banning, and is it legal, and what's the tax treatment and the like. Once you get past all those and you decide, yeah, Bitcoin is digital gold, it is the best safe haven asset for the 21st century, then the issue is, well, how do I buy it? And you can't buy it from traditional banks and wirehouses. You could pick up the phone and buy $100 million worth of a gold ETF in 10 seconds. 30 seconds. But buying $100 million worth of a Bitcoin ETF, well, there is none. I hear rumors, people say, well, there are a lot of banks where if you try to buy like GBTC or something, they either make you sign a disclaimer, they make you sign a form, or they tell you they won't sell it to you. So there's a lot of people, I guess, 90, as we enter the year 2021, you might know better than me, but I'm guessing 95% to 99% of investors, they don't have an easy on-ramp to buy this. It's a struggle for them. So you have to actually go through a search and look for an institutional grade brokerage, and you either got to find a fund you trust, and you either buy into it as a fund, or you got to decide you're going to find an exchange you trust and you buy the underlying asset. And there are pros and cons to either of those. Once you find that, if you're going to buy the underlying asset, you got to work through the issue of custody and who do I trust, and will I self-custody, and will I multi-sig self-custody with a 24-phrase seed key, or will I use an institutional grade custodian? And of course, that is, to a certain extent, the beauty of Bitcoin is the crypto anarchist could literally buy $100 million of Bitcoin, put it on a on a hardware wallet, or memorize it in their head and walk around with it. That's one extreme, and that keeps everybody honest, because knowing that you could take custody of this stuff means that if you're a bank or a custodian, you can't abuse your customer. No one's going to take delivery of $100 million of gold and carry that around in their head. So it's a nice theoretical benefit, but as a practical matter, 99% of the people don't want to self-custody $100 million worth of this stuff. They don't trust themselves as much as they trust an institution. So that means they have to go through this exercise of, do I buy it and custody it with an institution, or do I buy a fund, right? And a fund kind of solves the problem because I don't have to trade it. I don't have to buy it. I don't have to custody it. I don't have to worry about all these headaches. I just wire my money to a fund. They buy it for me, and then I get the economic interest in it.